I'm Amira Blake, and I need you to lean in for this one. Because if you've ever wondered why the people at the top tell you one thing, but move billions behind the scenes in another direction, this is your moment of clarity. We're diving deep into a hidden story you were never meant to piece together. JPMorgan Chase, the Iraqi Dinar, and a quiet financial buildup that's years in the making. Let's ask the big one up front. Why would the CEO of the most powerful bank in America, Jamie Dimon, go on record calling Bitcoin a fraud, a pet rock, and worthless, while his own company built a billion-dollar blockchain empire, launched a crypto coin, and gave clients access to Bitcoin and Ethereum trades? Now pause. Take that same question and apply it to the Iraqi dinar. Because behind the warnings and denials, JPMorgan Chase has spent the last 2 decades embedding itself deep into Iraq's banking system. And they've done it so quietly, most of the world missed it. But you didn't, because you're here. Let's rewind to the start. Back in 2003, just after the Iraq War, when the country was in financial ruin, the U.S. coalition needed someone to help rebuild Iraq's trade and banking structure. Guess who they called? JPMorgan. They were handed a contract, a lead role, to create and manage the Trade Bank of Iraq, or TBI. This bank would become Iraq's engine for financing imports like food, medicine, and reconstruction materials. JP Morgan didn't just lend their name, they built the wiring. TBI processed billions under their guidance, and they kept coming back year after year. Even in 2013, when most companies were scared to touch Iraq, JP Morgan returned for another one-year deal to help TBI with global trade finance. They built correspondent accounts. That's the financial bridge that lets Iraqi money move through the US and Europe. These aren't symbolic deals. This is the plumbing of global finance. Let me break it down further. If Iraq wants to buy turbines from GE or pay China for construction materials, that money, in US dollars or yuan, needs to pass through a correspondent bank. JP Morgan has been that bridge. Fast forward to 2023 and 2024. Jamie Dimon may not be talking about Iraq on CNBC, but JP Morgan executives are flying straight into Baghdad, sitting with Iraq's prime minister, meeting with the central bank, even attending private conferences titled Reforming the Iraqi Banking Sector. And now they're advising Iraq on how to fix its currency auctions, how to stop illegal dollar leaks, how to open up to foreign investors, and how to align with the IMF's Article 8 rules. Article 8, in plain terms, means a country's currency is ready for global play. No restrictions on foreign money transfers. If Iraq crosses that line, the dinar becomes a freely tradable currency. Now ask yourself, why is JP Morgan building a launch pad under the dinar while warning retail investors not to touch it? Because they want to be the gatekeepers when the real value shift happens. And here's where it gets even deeper. When Iraq was drowning in Saddam-era debt in 2004, JP Morgan stepped in again, this time to help restructure that debt. They helped settle over $20 billion in defaulted commercial loans. They orchestrated the meetings, they designed the bond swap, they basically rebooted Iraq's financial credibility from the ashes. Then, in 2015 and again in 2017, Iraq moved to issue new international bonds. Who helped run those deals? JP Morgan, Citigroup, Deutsche Bank. Always the same players. Even now, JP Morgan is acting like Iraq's quiet financial handler. When the U.S. Federal Reserve cracked down on dollar transfers from Iraq in 23 to stop smuggling and terror financing, Iraq didn't panic. Why? Because JP Morgan stepped in with a fix. They agreed to convert Iraq's U.S. dollar holdings into Chinese yuan on Iraq's behalf and send payments directly to Chinese exporters. That's how Iraq got around restrictions. That's how trade kept flowing. And that's how JP Morgan proved, once again, they're not just watching Iraq, they're steering parts of it. And don't think it stops there. In 2024 and 2025, JP Morgan sat with U.S. Treasury officials, the IMF, and Iraq's banking heads, plotting how to overhaul Iraq's financial system. These meetings weren't publicized. They didn't make headlines, but they happened, and they matter. Why? Because Iraq is moving, slowly but surely, toward integrating into the SWIFT system, aligning with ISO 2022 standards, and becoming IMF compliant. That means clean money, open flows, institutional trust. That's when sovereign wealth funds, big investors, and hedge funds start to pay attention. And guess who's building the roads for them to enter? JPMorgan. You want the kicker? While all this is happening in the background, JPMorgan is still publicly telling people, don't invest in the dinar. We don't deal in IQD. We're not interested. And yet, they're in the room with the Iraqi prime minister. They're the ones opening correspondent accounts for Iraqi banks. They're helping Iraq prepare for international money movement. Sound familiar? That's the exact same playbook they ran with crypto. Jamie Dimon called Bitcoin a fraud, while JP Morgan launched JPM Coin, built the Onyx blockchain platform, now Connexus, racked up over 180 blockchain patents, and started letting private clients invest in Bitcoin funds. He told the world it was worthless and then quietly built the future of banking on top of it. Do you see the pattern? Public discouragement, private accumulation, and it's not a theory. It's proven by action. When JP Morgan makes big moves, they do it in silence until it's time to turn the lights on. Now let's connect it to what's coming. In 2025, we're seeing all the pieces align. The Central Bank of Iraq is cleaning up its auction system. Iraq is experimenting with oil sales in Dinar. JP Morgan is expanding trade finance, correspondent services, and even offering to fund investment projects directly. The IMF is circling back, and Iraq's push for full currency liberalization, Article 8, is nearing completion. If you've been following the breadcrumbs, it's pointing to a trigger point. So what could happen? Imagine this: Q4 2025, October through December. Iraq announces Article 8 compliance, the dinar becomes convertible. JP Morgan opens institutional dinar access through their global platform. The same people who were told don't touch it now have to go through the banks to get it. And the value? Adjusted, subtly or sharply. And if not by December, then Q1 2026 becomes your window. That's when IMF fiscal calendars reset. That's when new budgets and reforms kick in. That's when the gates swing open, if they're going to. And here's where it gets real for stockholders. If you're a current investor in the Iraqi Stock Exchange, ISX, whether you're a local in Baghdad or a foreign investor holding shares through a broker like Rabi or Carmel, this monetary shift could change everything. A stable, globally recognized dinar means foreign capital can finally flow in at scale. That means volume, liquidity, visibility, price movement. In plain terms, if the dinar becomes internationally tradable, Iraq's entire stock market becomes 10 times more attractive to global institutions who've been waiting on the sidelines for compliance, transparency, and clean money flows. You could start seeing huge waves of foreign investor interest flood into ISX blue chips like AsiaCell, Baghdad Soft Drinks, Bank of Baghdad, and beyond, especially in Q4 2025 and Q1 2026. Stocks that have been flat for years could suddenly become hot, not because of hype, but because institutional gatekeepers now have legal and financial access to those companies. Foreign stockholders may benefit from capital inflows. Local stockholders may see market values swell as demand outpaces supply. Brokerage activity could increase. New IPOs could finally launch. And the ISX could finally be elevated to a market worthy of global participation. This is not financial advice, but it is a signal. When currency reforms and banking access evolve in a frontier market, the stock market is usually the first area to reflect the wave. So watch ISX trading volumes, watch institutional behavior, watch who starts to show up at Iraqi finance conferences, because these next 2 quarters could be the moment Iraq quietly steps onto the world stage, not with noise, but with access. So I'll say it again. This isn't financial advice. This is a call to observe what matters. Don't follow headlines. Follow actions. Follow who's meeting who's funding who's already inside the room. JP Morgan isn't in Iraq for charity. They're building a financial scaffolding around a country that's been in the dark for decades. Because they know what's coming when the switch gets flipped. So let me leave you with this. What if the real reason you were told to avoid certain assets is because the institutions wanted to control the on-ramps? What if the warnings were designed not to protect you, but to buy time for them to build? And what if the moment we've been waiting for isn't a myth, but a quiet inevitability already set in motion? Drop your thoughts in the comments. Tell me what piece of this puzzle stood out most to you. And if you want me to break down any part of it in a follow-up video, just ask. I'll see you in the next one. Until then, I'm Amira Blake, and now you know what they didn't want you to see.